reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that sounds like you are in the right place at the right time. So welcome back to my channel. I have so much content for you to catch up on, especially if you're new here. There are over 400 quick videos on all types of topics that new traders tend to struggle with. So get curious and check out some of the other videos I have here. And if you don't find what you're looking for, but you like my teaching style, you can always comment down below and I will add your video request to the queue. Now, in today's quick video, I'm going to be doing a highly requested topic, which is a scalping strategy that works for gold. Now, one of the benefits of scalping gold is the fact that it can move thousands of pips in a day, and you can enter this trade with a small risk as little as 1 cent, and your returns can be really amazing. So, in today's quick video, I'm going to be showing you how to trade gold using only one indicator. And if you really want to only focus on price action, you can get away with using no indicators. But for people who may be on the free version of TradingView, or you're just getting into trading, or maybe you just want to simplify your process, this is something that you can use. Now, the first thing that you're going to want to do, let's go to tradingview.com. This is the website that I like to use to do all of my charting and analysis. Now, if you have a broker that you can connect to TradingView, feel free to do that, or you can just use it for marking up your charts and doing your analysis like I do. If you don't have a TradingView account, don't worry. You can always create one for free. And what I love about TradingView is they give you so many tools that you can use before you feel comfortable to upgrade or before it's in your budget. Or if you are on the basic plan, you can have one or two indicators on your chart. And that is why we're going to maximize these free and limited features for my new traders. Now, once you're on TradingView, you are going to want to find gold or whatever asset that you want to scalp. And you can do this by simply clicking on your screen and starting to type what you're looking for. Now, the marker for gold is XAUUSD, and you can just click one and that chart will be pulled up for you. The next thing you're going to want to do if you are scalping, it doesn't matter if it's the 5 minute, the 15, or the one, you're going to choose your time frame. And if you don't see a time frame that you like to trade or you don't see the smaller numbers here, you can click this arrow for the chart intervals and find the time frame that you like. When you really like a time, you can click the star to the right and it will add it to your favorites. As you can see, these are the time frames I tend to look at in my trades. If I unclick the star, we'll see the 1 minute has disappeared. If I re-click the star, we can see it's been added to my favorites. Now, throughout my videos, you'll see me adding all kinds of things to my favorites just because it makes my process simpler and smoother, and I don't have to think about it every time. Now, the next thing we're going to do is we are going to mark up previous levels of support and resistance. This is the first step that I do in all of my trades, and it's because the market is pretty repetitious. It's always going to revisit the same highs and revisit the same lows, except for when it's creating new all-time highs or new all-time lows. So, an area of resistance you'll be able to identify because this will be a place where the market has sold before. Like if you see a dramatic reaction to where the market has sold, that's going to be known as an area of resistance. And there's a possibility that the market could sell here again. So, if you see a area where the market has bought, this is going to be known as an area of support. Now, even though I did add the line on this side, we can see that this area of support has been revisited plenty of times. If you see the market has touched an area and bought at least 3 times, that's going to be a strong area of support. So here we can see 1, 2, 3, 4, 5. We already have enough to deem this as a strong area of support. For my area of resistance, we have one, two, three, four, five. We have more than enough examples to let us know that it's strong or not. Now, you can create as many areas of support and resistance as you like. Wherever you see a strong reaction at, it's going to be a potential target for a take profit or a stop loss. Now, the next thing that you want to do is you really want to pay attention to the momentum and which way the market is going and who has control of the market. This can again be easily identified by if you see more red candles than blue candles and the red candles look stronger and bigger, that's usually a sign of a selling market. If you see more blue candles and the blue candles are larger than the red candles, this is going to be bullish, letting you know that there can be an opportunity to buy. Now, before we move on, I just want to show you what I mean by that. So here, initially we see that the blue candles were really strong. But then we see that the red candles started to get stronger. And then we see that the red candles ran out of steam. The red candles ran out of steam. They never really picked up. The blue candles continued to pick up and push the market up. Here we can see that the blue candles were really strong, and then we see that the power literally switched before our eyes as the red candles got stronger and stronger. So if you see more strong red candles, that's going to be a sign that the market may want to continue to sell or to start selling. If you see strong blue candles, that may be a sign that the market wants to buy. So that's the second thing I like to notice in my analysis. Who has the power? Where is the momentum going? Are the buyers pushing the market higher or are the sellers pushing the market lower? Now, just to go back to the beginning, the reason why we want to mark up these areas of support and resistance is because how the market reacts at that area is going to let us know if we should be entering for a buy or for a sell. So let's just look here for a second. Let's look here for a second, where we can see the market was consolidating for a short period of time, right? It was moving sideways. So it was selling at an obvious place and it was buying at an obvious place. But then once the market came down to this area of support, instead of buying, there actually was a break of structure to the downside. The next candle opened red and the market continued to push down. So because the market was not supported at that area, it broke past that level of support. And then the next candle opened red. That was our sign that the market was going to sell. And then we would have been able to secure a few pips off of that trade. Here's another example where we can see that the market was moving sideways for some time. Then we had a break of structure on the upside. The next candle opened blue, and then the market pushed up. So if the market gets to a previous area of resistance and it doesn't resist, it actually breaks above to create a new high, that's going to be a buying confirmation. If the market gets to a previous area of support, here's another example, and it breaks below and the next candle is red, that's going to give us the confirmation that we need to sell. Now, if we get a break above and a positive retest, we're just going to set our take profit at the very next high, right? I tend to have TP1, TP2, TP3, and all I'm doing is targeting these previous areas of support or resistance because the market most likely will come back to this area and it will come back to that area as well. So again, step one, mark your support and resistance. Step two, figure out the momentum and who's in control. Is it the buyers or the sellers? Step three, if you're not going to be using any indicators, you want to see how the market reacts above that level. If it breaks above a previous area of resistance and it retests blue, we want to enter for a buy. If it continues to resist at that area and you get strong red candles, we can enter for a sell and vice versa. If the market comes down to an area of support and it breaks below, we want to enter for a sell. If it continues to be supported and we have other strong bullish confirmations, we can get in for a buy. So let's go to the next candle and see what happens. We can see that we did get some resistance, but we don't automatically want to sell because we need to see that the sellers are actually picking up momentum. Because sometimes you'll see stuff like this and it will be a fake out instead of a breakout. So we're going to go to the next candle since we don't really have anything strong. And we actually get that break above the area of resistance. Now, a mistake I've made before is I would have sold here just because I got a rejection on the area of resistance, but I didn't wait for those other confirmations to see if the sellers would actually continue to pick up momentum or if they were just trying to start something. So I get my break and close above. We see what happens with the next candle. It retested blue. So that's a really positive sign for a buy. I would enter this trade for a buy if I was using no indicators. I would set my stop loss right below a previous low, and I would set my first take profit at the first previous high, as long as it's not more than my loss. Or I can actually go to TP2 because if we zoom out, we can see that that was the next area that the market could target. So let's just go ahead and hit play and see what happens in this trade. And we can see that the market pushed up and it hit our TP. Now, if we just zoom in, we can see how even at the next level, there was a break of structure above the previous area of resistance. Then there was a positive blue retest and the market continued to go up. We have the same thing happening here. There was a break of structure and a positive retest. And as we can see, our trade hit TP. So this strategy is extremely simple. All you have to do is set your support and resistance lines, wait for a break of structure, and then set your TP accordingly. That was a buy example, but let's look at a sell example so that you guys can see that it actually works both ways. So again, the first thing we're going to do is set our areas of support and resistance. And we're going to see what's really going on here. So we set our previous areas of support and resistance at all the areas we can see that the market had a reaction at. That's step one. Step two is going to be to determine, are the blue candles stronger or are the red candles stronger? And do we get that break of structure? So here it looks like the blue candles have been running out of steam, right? Starting here. And it looks like those red candles are picking up steam. But remember, we are not going to be impulsive. We're actually going to wait and see what happens, right? So we do see that we get the rejection at the resistance area, and we see that the red candles are picking up. Now, what we can do is we can enter this trade now, or we can wait for the break of structure below the previous area of support before we enter our trade, right? So we actually do get that break of structure. All we had to do was wait 5 more minutes. Let's see if the next candle opens red. And it does. This gives me the confidence I need to enter my trade. So if I enter for a sell, I can set my stop loss above any of these previous highs, and I can set my TP at a previous low. And we're going to go ahead and see what happens in this trade. We can see that the market actually, just like clockwork, it came right back down to that previous level of support. And again, we were able to secure a couple of pips in this trade. Now, what I've noticed when I'm trading gold, I like to set my stop loss anywhere between 700 to 800 pips if I'm going in for a longer trade. And I'll typically hit TP at around 1,000 pips, which is good enough if you are using the right lot size. But I really hope that this video was helpful. If you guys learned something, let me know down below in the comments or give the video a thumbs up. If you feel compelled, please subscribe to the channel because it helps the channel to grow and it helps this content to reach other people. If you like to connect with me outside of YouTube and you want to join my trading community and copy my trade ideas that I post every single week, all of that information is down below in my description box. But that's really all I have for you guys today. Until next time, rich friends.